right, everyone. Hello and welcome. Thank you so much for joining us. Without further ado, it's my pleasure to introduce Avi Gilbert, an Elliott Wave market analyst and the founder of ElliottWaveTraded.net, a live trading room featuring an analysis by him and a dynamic community of professional traders. Avi's Elliott Wave analysis appears frequently on sites such as TheStreet.com, MarketWatch, Forbes, and Seeking Alpha. He's here today to share some of his expertise with us. So to our wonderful live viewers, if you have any questions for Avi, please save them to the end of his presentation, and then you can type them into the chat box, and I will go ahead and pass them along for him to answer. With that all said, Avi, I'll hand the mic on over to you now. So if you need anything, I'll be right here. Floor's all
Thank you
yours.
so much, Charlotte. Good afternoon, everybody, and thank you so much for joining us. Just to give you a quick idea of how this is going to go, I'm going to give you a little background about what I do and how I do it. I'm going to try and explain it in as simple a way as possible so that I could then go into the charts I'm going to show you. I'm going to show you a large degree, a weekly silver chart, and I'm going to show you a daily GLD chart. So you can have an idea of where I think the metals are headed as we look out to 2023. But for now, I'd like to get into how I do what I do, because as Charlotte said, I'm an Elliottician. So what the heck does that really mean? Well, let's try and get into this. Many of you follow fundamentals when it comes to the metals market. But if you're going to be very honest with yourself, you're going to have to realize fundamentals fails when trying to analyze metals more often than it does help. The metals are a very, very pure sentiment trade. They trade on human emotion. Fundamentals really will often get you looking at the market in the wrong direction at the wrong time. For those of you that remember back in 2011, everybody was so beyond over the top bullish on silver and gold. And even during the entire drop from 2011 all the way to 2015, everybody was still very bullish for the most part because they were saying the fundamentals are still there. But when you lose 70% of your value as you do on silver, I'm not so sure how you can look at it and justify a 70% reduction in the value and not having seen it beforehand. So I'm going to give you a little bit of background of what we've been able to do in this market. Some of you that have followed me over the years may know this already, but back in 2011, for those of you that remember, gold was going parabolic during that summer. It was going absolutely parabolic. Some days you would see 50 some odd dollar rallies in gold, and that's from much lower levels. So a $50 rally at the time was considered a lot. And, at the time, everybody was so over the top bullish. People were, the only arguments that I was hearing from the various analysts and people in the market was not, when is it going to top, but how much beyond 2000 are we going to go? I mean, 2000 is almost an absolute given in every single person's mind that you would speak to or read from, if you remember that time frame, if you're being honest with yourself also. But I remember I posted an article at the time. It was, as you could see, it was in August 2011, and the last sentence in the article was this: it said, since we are most probably in the final stages of a blow off top, I'd seriously consider anything approaching the 1915 level to be a potential target for a top at this time. Now, when I wrote that article, you can go back and look at it. You will see that people ripped me a new one, and those were the people that were being nice. People were telling me I know nothing about this market. I don't know anything about how this market works. I know nothing about gold. I don't know the fundamentals. I know nothing. Now, it got even worse because somebody I think it was in that comment section for that article, maybe in the next one, I don't remember. But I know they asked me, well, what's my downside target? So I said, well, I say it's at least 1,000, but it could go as low as 700. But I think the 1,000 region is a really nice target. Now, again, remember, gold was going parabolic at this time. And I was there saying, not only do I see that we're going to top at a certain level, I was saying we're going to go back almost 50%. Again, to say that people made fun of me, I'm telling you, those were the nice people. Now, the market, as we now know, the gold market topped at 1921. I was off by $6. So during a parabolic rally, I apologize, I was off by $6. And we now know market not only topped at 1921, but we dropped as low as 1,050. Now, right before we got there, and you could see the timing of this, around the time we got there, I had actually bought the bottom. For those of you that know Doug Eberhardt, I bought a large chunk of gold the night that gold bottom, and I think it was about 1,045, 1,050, and we called the bottom literally that night. Maybe about a week later, a few days later, I wrote this. And I said, as we move into 2016, you guys can read this. I thought there was a greater than 80% probability that we just saw a long-term bottom formed in the metals and miners, and the long-term bull market resumes. Now, as we now know, that's pretty much what happened. So not only did we catch the top, we also caught the bottom, and also literally within a couple bucks of the actual tops and bottoms. How do we do this? Well, that's going to bring me to our next perspective, and that is, what is Elliott wave analysis? Well, back in the 1930s, there was he was actually an accountant, a gentleman named Ralph Nelson Elliott, who, after the stock market crash, he is trying to wonder what's going on in the market. So he started studying the market, and he found something very interesting. He identified that the market is fractal in nature. Well, what the heck does that mean? Well, it means that the market is variably self-similar at all different degrees of trend. That sounds really impressive, right? Let me try to explain to you what it means. What he identified, and you could see here, that Elliott theorized that the market is driven by public sentiment and mass psychology, and that moves in 5 waves within a primary trend and 3 waves within a counter trend. So once a 5-wave move in public sentiment is completed, then it turns, and that's when the markets often turn. And as he put it, it's not really the reasons are not because of fundamentals. The reasons are not usually because of some form of news, although news can act as a catalyst to a market move. But the substance of that news is not always going to be indicative of the direction of the move. That is why you often will see negative news coming out and the market reacts positively, or you'll see positive news come out and the market will act negatively. For example, when we bottomed in the S&P 500 on October 13th with a very negative CPI report, everybody was looking for a 5% crash or more. We were actually saying this is the bottom culmination, and we expected at least a 10 to 15% rally off of that day. And that's exactly what happened. So news can act as a catalyst, but the substance of that news will not always be indicative of the direction of the market move. Now, and all of this is what Elliott identified many, many moons ago. But what is most interesting is there have been psychological studies of the market conducted over the last 30 years that have come to support what Elliott identified back in the 1930s. So how do we use this to identify turning points in the market? Well, as you can see, I have the chart laid out for you, and all you have to know is how to count to 5 to be able to understand this. And I'm just doing this on a very, very simplistic way so you can understand what I'm trying to convey to you with the charts I'm about to show you. Now, I'm going to try to finish this off and give ourselves at least 5 to 10 minutes to answer questions at the end. But for now, let me try to get into it. Now, as you can see, I've labeled the 5 waves up with Roman numerals, correct? Everybody can see Roman numeral 1, 2, 3, 4, 5. Now, when we say that the market is variably self-similar at all different degrees of trend, it means that waves 1, 3, and 5, which move within the primary trend, comprise 5 waves themselves. And I identified that, I outlined that with, as you can see, with Roman numeral 3. You can see how Roman numeral 3 breaks down to waves 1, 2, 3, 4, 5. In fact, if you look at wave 1 and 5, it does the same thing. Waves 1 and 5 also, I didn't label it, but waves 1 and 5 also break down into 5 wave structures. Now, if you've also noticed, wave 2 and 4 are 3 wave structures, and they are counter trend. And we usually label them ABC. When you're in the primary trend, we utilize numbers. In the counter trend, we'll utilize ABC. So the 3 wave move down in wave 2 is an ABC. The 3 wave move down in wave 4, ABC. So that's really all you need to know from the basics to understand how Elliott wave works in general. Now, there's a lot of mathematics that go with this, and that's that we utilize Fibonacci mathematics to identify how far will a 5 wave move go. And what's really interesting is that in order for me to come up with that 1915 target back in 2011, I actually utilized a 100+ year chart or 100+ year market action in the gold market to come up with that target. And yes, I was off by $6 on that. And that same structure is what I use to calculate the minimum 1,000 region target from that 1900 target. So, it's not just something that looks nice. If you utilize it, it is one of the most powerful tools I've ever come across in any type of market analysis anywhere. And for those of you that know my background, I've passed the CPA exam. I went to law. I went to college. I got an accounting and economics degree. I got a dual major. I went to law school. I went after that and did a master's of law and taxation. I was then a partner, national director of a large firm for many years. I put together a lot of very large deals. I know how to read balance sheets. I understand economics. I understand the fundamentals, and I understand accounting. I understand how all of this works, but I have never seen anything more powerful to be able to identify market terms than Elliott wave analysis. And I have learned many different types of analysis in addition to what I just outlined to you. I've never seen anything that gives you turning points much more accurately. Is it perfect? Absolutely not. There's nothing perfect. We do everything based on probabilities. There's nothing that is perfect. So we utilize this to identify not just market turning points, but also to generate a better understanding of where are we in the whole market trend. It gives us market context like no other analysis methodology I've ever seen. But what also it does is, because it gives you the market context, when everybody around you is uber bullish, it helps you to maintain a focus as to where you are in the market context. It doesn't allow you to get away with yourself. It doesn't allow you to have those emotions take over, assuming you don't allow it to. So if you're doing the analysis properly and you're focusing on the analysis, you're not focusing on the general sentiment out there, which otherwise would push you in another direction. The goal of Elliott wave analysis is to analyze sentiment, not to participate in it, which one of our longtime members said, and I love that quote ever since. So let me show you, I'm going to take you a step back. I'm going to show you the charts specifically for GLD and for silver. Now, again, these are very, I try to simplify it, so I just don't have all the detailed analysis within it. It's very, very simple here. As you could see, we had wave 3 off the 2015 low, topped in towards the end of 2020. And ever since that point, we have now been in basically a 2-year consolidation. It's been a 2-year long consolidation. And as you can see, I have labeled it as A, B, C. And that's for wave 4. So after wave 3, we get a wave 4. So what am I expecting now? I'm expecting wave 5. Now, remember, everything within a primary trend breaks down even further into 5 wave structures. So wave 5 should break down into a 5 wave structure. And recently, we have seen the market rally off the low. in an initial 5-wave structure. So again, remember, if wave 5 is going to break down into a 5-wave structure, then waves 1, 3, and 5 within wave 5 are also going to be 5-wave structures. We have identified what looks to be a 5-wave structure off the recent low in GLD. Now, I'm not certain about this. The market may still try to push higher one more time. It is not necessary. We have the minimum number of waves in place for a 5-wave structure. So what am I looking at over the coming weeks? I'm looking for remember, after wave 1, you get a wave 2, a 3-wave ABC pullback. So I'm looking for, assuming we have top there, I'm looking for an ABC pullback for wave 2. And when this 1-2 completes appropriately, and then you take out the high of this wave 1, you then confirm that you are now in a wave 3. Normally, wave 3s are the strongest part of the trend. Normally. But the reason I say normally is because that when you're dealing with the commodities often will have their 5th waves being the strongest part of the trend. So what my expectation is going to be over the coming months into the next year or so, that is generally my expectation over the coming year or so. Now, of course, this could get a lot more extended, but this is my minimum target zone. Minimum target zone. Now, for those of you that are familiar with technical analysis as well, some of you may recognize that this also is turning into and if it appropriately follows through and you get a nice corrective 3-wave move here and then we break out, this is an inverted heads and shoulders. So some of you may recognize that, for those of you that understand technicals. That's an inverted heads and shoulders. So normally, like I said, I've learned all the technical analysis as well, the standard technical analysis. The only time I will actually identify an inverted heads and shoulders is a scenario like this, where the right side of the shoulder is completing a 1-2 structure. If for those of you that follow this technical analysis, heads and shoulders structures fail quite often, which is why if I have a 5-wave 1 followed by a corrective wave 2 as my right shoulder, to me, that is a very strong indication that this is not a heads and shoulders pattern that's going to fail. My opinion is, again, assuming we continue over the next few weeks to get a corrective pullback in a wave 2, and then we take out the high of wave 1, wherever it is, my expectation is we're over the next year or year and a half, I don't know how exactly long it's going to take. My expectation is this is our minimum target. Now, I showed you gold. This is GLD. GLD, great opportunity, right? I think silver blows this opportunity away. Let me show you that. Now, I know that from a timing perspective, it's being pushed all the way out into the 2030s. Ignore the timing aspect of it. I'm just analyzing this from, I'm just trying to show you a path. I'm not showing you the timing of it. In truth, I think the timing of this will look much more like what we saw in 2010. I think it's just going to wind up being, as you notice, this had a nice little setup here, and then boom, it just went parabolic. I'm expecting a similar type of setup in silver, and it could only last a couple of years also. I'm not expecting that it's going to take this long. Silver usually runs very hard when it runs. Now, there's only one little proviso that I have on this. The structure off the low here is not entirely clean as it was in the GLD. There is some potential that over the next few weeks, silver could get a lower low into this support box. And I will tell you, and I've said this to my members over and over and over again, If you can buy physical silver below $20, you're getting yourself a great deal. So again, if we do see, and we're tracking this very carefully, because there could be a lower low, I am not certain yet, in silver, and that would be the most amazing opportunity you would have for 2023. As it is, I think it's setting up for a parabolic rally, but there could be an opportunity for a lower low in silver, and it would only be a marginally lower low. It would probably hold this support box, and then you would probably see silver ultimately turn and take off parabolically. But my expectation is I think you're going to see a similar action in silver as we saw in 2010. I think the setup is in place, and when silver runs, silver really runs. So that is my general view of where we're sitting in both GLD and SLV. I think they're both getting set up for a very strong rally as we look towards 2023. I'm waiting for the market to conclude this setup, ideally over the next several weeks before the rally can start taking hold in earnest. So that is my presentation in a very, very quick fashion. We have a few minutes left, so I can open it to questions. Often we get a lot of questions that will elicit a lot better discussion than I've already identified. But let me see what you guys ask as questions to see if we could do anything. Can Elliott wave be useful to apply to point and figure style charts? You know, people ask me about the same question about using candlesticks for Elliott wave, and my answer is going to be the same. I don't think either is a good way to apply Elliott wave because it hides a lot of the actual smaller degree wave structure. You want to see everything in the wave structure, and both candlesticks, and you can't see it in a point and figure style chart either. So my answer to you is generally no. Are we on the bull path finally? There's a lower low still in place. I think I already said that. Parent cup and handle formation. Okay. Seems to have failed. What's a failure? Again, I'm giving you what I'm seeing from my perspective. I'm not going to go into all the other technical jargon that people have used. I'm telling you what I'm seeing from my perspective. As long as this 1-2 structure perfects over the coming weeks, and then we get a breakout over the wave 1 high, you're going to see the metals moving like we haven't seen for quite some time. Has gold complete an ABC correction from the August 2020? I just showed you that. I think, to me, it looks like we've gotten 5 up. GDX, GDX is a little tougher because GDX seems to be a diagonal. So it's a little, and I'm looking for a C wave and a diagonal, and that should be a 5-wave structure also, but GDX is a little bit more complicated. Do I have an alternative count in gold? Yeah, it can get a lower low also, like silver. Okay. Any other questions, ladies and gentlemen? Ooh, a whole bunch now. Okay, hold on. Other than gold here, what are good ways to trade these? Okay, I'm going to warn you about GLD and SLV. Okay, I use them to analyze. I will use them for trades. I will not invest in GLD and SLV. And I've given a long webinar because, like I said, I'm an attorney. I went through the prospectus, and there are some troubling things in their prospectus. If you want to go to my website, ElliottWaveTrader.net, on our public library page where we have articles and webinars that are open to the public, you will see my presentation, shall we say. I did a webinar when I went through the prospectus on GLD, and I explained why it is not to be trusted for long-term money. You want to trade it, great. It's not to be trusted for long-term money. Okay. Can Elliott wave be used for copper? Elliott wave can be used for anything that people buy and sell for the most part. As long as there is a mass market, Now, there's a big difference between a mass market like in gold or the S&P and a a micro cap biotech company that has one product coming to the forefront, coming to market. There's a big difference. When you're dealing with a micro cap that has one product that they're trying to bring to the market, that is going to be driven predominantly by fundamentals, because you're not dealing with a mass market there. So when you look at things, you'll have to look at the market on a continuum. The higher you are in mass sentiment, in other words, mega cap stocks, the S&P 500, the gold market, whenever you're dealing with a very large market that has the masses involved with it, that's where you're going to see sentiment very, very important in the analysis. The further you move down the line on that continuum, down towards that micro cap stock, it's going to be less and less, and fundamentals will be more and more. Okay, so when it comes to copper, yes, driven by sentiment. Is there any silver stock? I'm not going into individual stocks here. Where is the top of, when you draw wave one, where's the top of 5? I don't understand what you mean by that question. What is an alternative to holding physical silver? I can't opine as to alternatives in holding physical silver, because I have personally not done the work, because I either hold physical silver or I will trade the ETFs. For me, there's nothing in between, so I really haven't done any due diligence. I strongly urge you to do due diligence if you do anything other than hold physical silver. When risk management providers are wise to sell at least a portion of equity paper holding at the top of wave 3, just in case it's corrected wave. Well, it's interesting, Brian. A lot depends on your plan. One of the things I do for every single member that comes in, they are directed to look at an open letter that I provide to every single member that comes in. What does that letter say? It offers very basic advice to new people, because I don't know your experience, and do you know nothing? Are you an experienced trader? Do you know nothing as an investor? Are you an experienced investor? I don't know. So one of the things I tell you is, I don't care who you are, I don't care what you do. Before you put money into any stock, ETF, chart, whatever you want to call it, anytime before you put money into anything, you have to have a plan. You have to have a plan as to where are you buying. You have to have a plan as to where is your stop out for risk management purposes in case you're wrong. Most people have no risk management. So they go from saying, oh, this is a trade, and when the trade goes awry, they say, oh, it's now going to become a long-term hold. No, that's not how you approach the market. Hope is one of the worst 4-letter words in investors' vocabulary. So you must have a plan before you go in. You have to know where you're buying, you have to know where you're stopping out, and you have to have a plan as to where you're going to sell. If you want to choose to sell it at the top of a 3rd wave, that's reasonable. You can always go buy back at the end of a 4th wave. And if you're trading it in options, you must sell at the top of the 3rd wave, because the amount of value you will lose during a 4th wave if you're trading on options will kill a lot of the profit you've made. So you need a plan. That's where I'll leave it. So expecting at least a pullback for 2 and potentially back to the blue box. Then silver, yes. Why track versus future? Ralph's asking, why am I tracking SLV and GLD ETFs versus the future prices? That is a story that goes back 11 years. When I first started Elliott Wave Trader, I was the only analyst there. We now have like 23 or 24, but I was the only analyst. So when I asked my subscribers who started with me, would you rather me track future prices or would you rather me track the ETFs? The majority said ETFs. So that's what I started with, and I still do it today. Since then, I have analysts, other analysts that also are tracking the futures prices. So we do both, but that's why I track SLV and GLD. Okay. Does SLV and GLD, I don't know, I don't remember. I'd have to ask my tax attorney if it generates a K1. I don't remember. Would a leap call option on GLD be okay? Mitchell, again, I can't answer that for you. What is your risk profile? How risk averse are you? How well do you know options? there are questions I get asked that I cannot necessarily answer because there are so many factors to you that come into play. I cannot necessarily answer that. Are there any other questions? Because I think we're just about out of time.
Yeah, Avi, I think that's just about it for questions.
Okay,
We did
great.
have William tried to re-elaborate, though I'm not sure if it's still understandable about the target 1, target wave 5. They wrote if silver target wave 1 is around $60 and then just target wave 5 question mark. So I
Uh,
don't know.
way too early to discuss.
Yeah, I thought so.
I mean, you're asking me for something, 20, 30 years down the road. I'm not prepared to discuss that today.
All right, then, everyone. That does conclude our time for this session. Avi, thank you once again for a fantastic presentation. It's always so much fun to be your host.
Thank you so much for having me, Charlotte. I greatly appreciate it. And thank you for your help.
Absolutely. And just so you know, we do have everyone in the audience who asked questions and who was just tuning in saying thank you very much for all of that great advice. And to all of you who were with us today, thank you for joining us. And please be sure to stay tuned as we do still have a panel for you after this session. And we have a whole bunch of exciting content stocked up for you tomorrow. All right, everyone, I hope you have a great rest of your day.